Good morning, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily update on our YouTube channel. As always, it is important for us to go through a bit of a disclaimer, and that means anything we will be discussing in this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. So one of the main questions that investors are looking at when they look at the market today is why are we not seeing the same sort of a momentum that we've experienced last week? Well, folks, there are a number of reasons for that. Number one is we have a lot of earnings coming this particular week, because if you look at the Nasdaq industrial Nasdaq composite, we have seen a very much of a consolidation, meaning the sideway movement for the Nasdaq index last week. And the reason is because investors don't want to bet big, because this week we're going to hear from some big companies in terms of their earnings. What are those companies? That's your Amazon, Apple, Facebook, and Microsoft. These are just some of the names, and of course Tesla, which are really going to bring enormous amount of a momentum. Now, if you compare the three indices, meaning your Nasdaq, the S&P 500 index, and the Dow Jones, there is no doubt that once again the Nasdaq is playing the lagging role, meaning it is no longer the leading index which is pushing everything to the upside. The only index which is still gaining and still has that momentum, it is your S&P 500 index, because that particular stock index is very much consolidating or hovering near its all-time high. So if there is any sign of that bull momentum coming back into the market, or traders becoming a bit more optimistic, we can see that by looking at the S&P 500 index. Now, having said that, it is always important to keep in mind the impact of earnings. And that means the Nasdaq is obviously going to see higher volatility because of the stocks which will be producing their earnings, and as I've named them earlier. Now, moving away from the stock market and going into the crypto market, of course, over the weekend, it was all about those negative news coming from Turkey, how sham projects and the different exchanges, they have run away with their clients' money. And of course, investors naturally become very much concerned about that. But now investors have very much shrugged off those concerns, and we have seen tremendous gains across all crypto assets. And by that, I mean Bitcoin, Ethereum, and Ripple's XRP. They all have moved very hard. They all have scored very decent gains today. I mean, Bitcoin is up more than 5%, Ethereum is up more than 7%, XRP is up more than 4% today, and it's only Monday, so we are starting the week on a very strong footing. Now, something that we need to keep in mind, something that we need to keep in our mind is that the traders have been very much selling into the rallies. Now, what does that mean? Meaning every time we have seen for the last few weeks Bitcoin popping to the upside, traders have actually sold those rallies. We have seen the evidence of that in Bitcoin. We have seen the evidence of that in Ripple's XRP. We haven't seen the evidence of this to a larger extent in Ethereum. Why? Because over there we still have a very strong interest among institutional investors who believe that Ethereum is highly likely to continue its journey to the upside, and that journey, the minimum target, the short-term target they believe for Ethereum is at 5,000. So this week, if the momentum continues the way that it is, we could easily see Ethereum touching that $3,000 price level. If you wanted to know more about the specific price levels, where are those pivot points, or where the market can possibly see buying or selling pressure, we have done earlier today a technical analysis video, so highly recommend you to go and have a look at that. Now, in terms of a risk-off assets, and by that I really mean gold prices, of course gold prices are still moving to the upside, but the most important aspect when it comes to gold price comes from one particular time frame, and that is is your 4-hour time frame. Keep an eye on the price and the 50-day simple moving average. As long as the price continues to stay above that, we are likely to see more moves to the upside. Now, in terms of events, we have the FOMC. The Federal Reserve Chairman will be speaking this particular week. Not the FOMC is actually the following week, and also we have the US inflation data. Both of them are very, very important events which can bring higher volatility for gold prices, and that could either push the prices above the 1800, or we could go and revisit that 1700 price level. Now, in terms of oil prices, we are obviously not seeing any uptakes over there. The 50-day simple moving average has really pushed the prices back to the downside, and the concerns are that coronavirus situation in India is really likely to influence everything there. All right, folks, that's all for now, and I'll see you guys same time, same place tomorrow. Thank you.